Today we'll be asking whether the policy of America First is backfiring. Good morning and welcome to Morning Markets. Donald Trump's election success was widely thought to benefit US companies at the expense of the rest of the world. Most investors thought that the US stock market would benefit quite quickly from benefits such as tax cuts, while a tax on American institutions and the global financial order would only have longer-term consequences. As it turns out, the chaos surrounding the Trump administration and concerns about US tech superiority have had an immediate effect on business and consumer confidence and resulted in having a detrimental impact on the US stock market. The tech-heavy Nasdaq is down about 5% year-to-date, and the broader S&P is down about 0.5% year-to-date. Meanwhile, German equities have had the best start to the year since 2015, up 16%, and that follows an impressive performance in 2024. So what's going on here? Donald Trump's insistence that Europe, particularly Germany, spend more on defence has led to expectations of Germany abandoning or at least adjusting its fiscal straitjacket. As a result, German bond yields have risen relative to US Treasury yields, and defence stocks are up 30% in Europe. Last year, talk of American exceptionalism and the superiority of American company earnings was rife, while Germany's economic malaise was the source of much concern, bordering on schadenfreude. By the time of the US election, European economic and market sentiment was very depressed relative to the US. And of course that marked the turning point, and since then European equities have outperformed US equities by 15%. The danger now is that investors are falling in love with the anti-US, pro-Europe narrative, and behind the headlines, US companies are actually still performing pretty well. These twists and turns only go to show that maintaining exposure to a broad range of equities and asset class makes most sense in uncertain times. Thank you for listening.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.